Yep. Hi, this is Cayden from ViA Value Investing Academy. Now, my apologies. We're supposed to start at 9, so right now it's like 9:11, right? Some people, what happened to the timing? My apologies. Yeah, the reason why for this late, so-called, we start at 11 minutes late, right? Because before this, we were on Facebook Live in our VIA gathering, and then there were some technical issues. They cannot see this, cannot see that, so we're trying to fix that. So my apologies. Then I have to spend 30 seconds rushing to the toilet, right? But eventually, good lah. I'm still back. So my apologies, right? Okay, so let's get started. Just to let you know that, hi, my name is Cayden, and this evening, right, I'm going to talk about one company which is called Facebook. But before that, maybe I just need our team member to show the slide, right? Yeah, to show the slide. Now, if you no, just to check, just to make sure that you can hear me and see my slide, right? Now, by the way, if you can hear me and see my slides, can you just say yes? Yes, or yes, just type yes, right? So that you can hear and see my slides. Yeah, because a lot of stuff I need to share, right? Yeah, and sometimes the YouTube a bit lag, so I just want to make sure that everybody can see and hear. Okay, yeah, okay, good. So let's get started. Now, if you're able to see and hear, you should be able to see this slide. And just to let you know, right, eventually this evening YouTube Live, we left at this YouTube channel. Yeah, YouTube channel. And you can see on the right side, there's this QR code, right? QR code. Now, so that every time when we have any stock analysis, we talk about something really sexy, fun, whichever company, right? You can always be notified. And you will be notified provided you use your phone, you scan this QR code, and then you become our subscriber. Anyway, oh yeah, so many years already. Okay, good. So we have our 255, so thank you for attending, right? Thank you for being a patient. So let's get started, right? Yeah, started. Let's jump straight. The whole topic is about Facebook, and then there is this huge 26% decline, right, recently. So now with this decline, is Facebook, or rather Meta, right, a good investment? But before that, if you are able to see the slide, you will see this Facebook share price has been increasing, right, way before 2014 until the most recent high, right, at this 3rd September 2021. So you can see this is a 376. This is the highest already. So if you look at this from far, right, if you look at here, you look at here, you look at here, you look at here, at any point in time, you realize that share price keep increasing. It's like Alibaba, It's like, the share price keep increasing. I want to buy, but no chance to buy because the share price keep increasing. And sometimes human being has this FOMO, right, fear of missing out. Yeah, when they see something increase, they thought that they will increase forever. Until something happened. So what's the something that happened? Do you see there's a plunge over here? Yeah, plunge over here. So, but if you look at this plunge here to here, right, it may not be a lot because I'm showing you so many years of data. Yeah, but if I zoom in, right, the plunge will be more magnified. So I'm going to show you another one, which is a 1-year share price chart. So this is more apparent, right? From this point, and then it goes to this point. Yeah. So here, right, do you realize that it's a 1-year low, 52 weeks low, right? So which means the share price has plunged from the most recent high of 382 to the, at least this afternoon share price of 219. So that's a 42% drop in price. Remember, the keyword that I use, right, is drop in price. I didn't use the word drop in value. So there's a difference between a falling of share price and falling of value, and I'll share more later on. So right now with this dip, and then there's a lot of bad news about, Meta is not going to grow. So usually when something happen, right, people will want to add in. And so that people can read the article, right? So right now, is it a good investment? Good investment, And if I look at the PE ratio, right? PE ratio stands for price to earning ratio. So the highest PE ratio was about 40, and because of the drop in share price, it become 15. So now it's everything PE falls because the share price falls. So right now, is it? So now the question is, it all depends. If you don't have a stock, is it a good chance to buy? Okay, if you don't have a Facebook or Meta. If you have Meta or Facebook right now, and then you witness that your stock price plunged 26%, the most recent one, or over the past few months, they dropped by 42. What are you supposed to do? Are you supposed to buy more? Are you supposed to hold? Or are you supposed to cut loss? So these are the questions that are inside people's mind, right? So I'm going to address that as much as I can. So before we talk about whether buy, hold, cut loss, right? Let's talk about what is meta. Yeah, I'm making an assumption that when you buy the stock, you should know what they do. But in case you just anyhow whack, right? But it's okay. So I'm here. I'm going to give you some details. Now, remember, but before that, I better share some disclaimer, so that when I want to help, right, I wouldn't end up being, got haters remark on the YouTube, that kind of thing. So I don't need. So let me just read out a disclaimer as quickly as I can, right? So remember, the purpose of this evening's Facebook case study, right, is just solely to illustrate the application of value investing. So because I am a value investor, right, and of course, different valuation method in the context of real-life companies such as Facebook. And remember, under no circumstances does any information provided tonight in my sharing, right, represent any recommendation to buy, sell, or hold any stock. So I'm very careful with my words. I will not say, oh, you're supposed to buy. No, I cannot say such things. So remember, the illustration in the case study demonstrates the general application of value investing principle, and it doesn't take into account your individual characteristic, profile, or risk appetite of given investor. So remember, right, in no event shall VIA or me, right, myself, be liable to you, viewers, guests, or third party for any damages of any kind arising of the use of any content shared here. Remember, this whole long thing, right, including without limitation use of such content, intended purpose, and so on. Okay, so I'm not going to read. So remember, neither Mind Kinesis Investment, right, or VIA nor me are not operated by or affiliated with any broker, dealer, or licensed financial advisor. Okay, I read as quickly as I can. So let's get started. So it's for illustration, right? Now, so let's talk about what. And before I talk about what, let's talk about how this Facebook and then came about and then eventually became Meta. So this is a very simple timeline. Actually, the entire evolution is quite complex, but I'm going to make it very simple. So of course, Facebook started somewhere around 2004, right? And then eventually they add on features. They want to have a monetizing feature. So they have this Facebook Messenger, and then they bought over Instagram, and then of course there's an error, right? This one should be WhatsApp. Okay, and of course they bought over WhatsApp, and then subsequently this tiny little black thing is Oculus. So these few things are the key product, right, that Facebook has. So there's another one called Workplace. Okay, I'll ignore the rest, but these are the key things. So if you go to a Facebook's website and then you read their mission, right? Yeah, mission usually is quite inspiring, but as investor, other than mission, we don't talk about their fundamentals. So mission, they say, to give people the power to build community and bring the world closer. This is the inspiring part. But at the back, there's actually a money-making mechanism, and I'll share more, right? And of course, the vision is to help bring metaverse to life. So this is their future. Mission is what they do today. Their vision is where they want to go. Okay, so this is very broad, right? Now, so let's be very specific. Yeah. So what are the products that Facebook or Meta have? Okay. Now, their products can be divided into two categories. The first category is called, in their annual report, they use, I quote, right, family of apps. Okay. And the other one is reality labs. So let's talk about this family of apps. What kind of apps do they have? The apps on our phone, right? First one, everybody know, which is Facebook. Yeah. So we must understand the Facebook function, right? As a user, I think you should be very familiar. Now, if you do not have a Facebook account, you go and get one, and then you will know. Okay, you will know. Then, of course, if you are much younger, right, maybe you use Instagram. So I use both. So these are some of the Instagram features. Now, I need to list out in summary. Volume very soft, cannot be, right? Yeah. So for Zerchan, if you say volume very soft, maybe you increase your volume of your PC or your phone. Yeah. Okay, By the way, is it very soft? The rest, can you hear me? Or is it just a Zerchan, right? Because my teammate saying that the volume was okay. Okay, should be okay, Let me just continue, right? And the third app under this family app is, of course, the Facebook Messenger. And I like to use this Facebook Messenger because it allows me to attach very high resolution file. Now remember, if you have ever used WhatsApp, right, to try to send a picture or a video, the picture file, all these are highly compressed. So I like to use Facebook Messenger. So in other words, loud, huh? Okay, Jocelyn. Okay, good. So these are the 4 apps. 4 apps are under this family of apps. Now, right now I'm just talking about what, how they monetize is a separate story, right? Now, as of now, WhatsApp, right, did not make money for Facebook. In other words, a Meta, right, has not monetized WhatsApp yet. They took over this WhatsApp, they have not figured out how to make money out of it. Okay, Now, then of course, this Facebook and the Messenger, they're together. Right? Then Instagram is a separate app. Okay, so this one, Then on the other side, very few people know. They also make some money, right, through this category of products called the Reality Labs. Okay, now what is this? This is actually a goggle, right? And this is like a Nintendo type of game, right, where you use your hand to hold and then you can move and then you play games and so on. Remember, their vision is to go to metaverse. And in order to go to metaverse, right, you want to have that experience, the 3D experience, as though you're walking in really, you could feel it into the virtual world. So they created all this hardware, so that you can go into metaverse. Now, so this series of product, this whole thing, right, they call it Oculus Quest. But let me share with you some pictures, so that you know. Remember, goggle, right? This one is to use the hand to hold, right? The hand to hold, So what I'm going to do next is I'm going to play a short video so that you know what Facebook is doing. And usually for this Reality Lab, right, they don't talk about it. Everybody knows Facebook and so on, but they are not very familiar with this Reality Lab. So right now I'm just going to escape my sharing for a short while, and I'm going to play a YouTube video, right? Very quick one. Also, you just be patient with me, right? So I'm going to launch the YouTube. Yep. Wait. Okay, ready? Wait. Hang on. I'm going to share my screen, right, with sound, right? Share sound, right? Okay, remember, this one is just a 1-minute video. They talk about the product, Reality Lab, right? This Oculus Quest, so that you know in future what you want to do. So here it goes, I'm going to play right now, right? Okay, this is it. Hang on there, Okay.
Oculus Quest is an all-in-one VR system. It's just you and your hands, completely free and immersed. With 6 degrees of freedom, state-of-the-art optics, and built-in audio. You can forget about wires, PCs, and phones. Oculus Quest is ready to play when you are. The headset relies on 4 ultra-wide angle sensors to map your environment as you navigate through it. And with Oculus Insight tracking, every move you make in the real world translates right into the game you're playing. Combine that with Oculus Touch controllers, and the game is at your fingertips. So when you grab, swing, or cast a spell, you'll feel the power of every gesture. The next level of VR gaming is finally here. Introducing Oculus Quest.
Okay, good. So this is about Oculus Quest, right? So let me just get back to my slide over here, right? Okay, give me a second. I'm trying to pull out my slides over here. Okay, give me a second now. Let me just exit from my YouTube, close it, pull out my slide, and I'm going to share. Okay, don't worry, just the next couple of seconds. Yep. Okay, so here it goes. So let's do a quick summary in the next 5 seconds, right? Yeah, so how do they make money? Remember, family of apps and then Reality Labs. But we want to zoom into detail. In investing, you always want to look at the detail, right? Yeah, not just fuzzy stories and so on. So now the next question is, which one makes most money? Is it the family of apps that makes most money or Reality Labs? And how about the future? Yeah, and what's it got to do with the share price plunge? Is it a problem or is it an opportunity? So let me just continue first, and later on the dots will connect. Now, so let's look at the detail. Now the information that I'm sharing with you, right, are highly updated. So right now we are in February 2022, right? And can you see the information that I shared is year ended 31st December 2021. So this is the most updated already. So if you look at this family of apps and then Reality Lab, right, you can see these are the profits, right, in millions. Millions, yeah. So in other words, the total amount of money that they make is 117,929 millions, and you can see for the family of apps, right, yeah, it contributed 98.1% of the entire 100% revenue. Sorry, not profit, 1% revenue. Now, whereas the Reality Lab, right, only contributed 1.9. So it's quite insignificant. So what does this mean, right? It simply means that the one that brings in the bread and butter is family of apps. Yeah, which also means if something happened to that 4 apps that we're talking about, it may destroy Facebook. So the drop in share price, has it got to do with this family of apps? Yeah, so just hang on there first. So right now, remember, family of apps, Reality Lab. Under family apps, there are 4 apps that generate 98.1% of the money. So we want to know whether the income stream, right, is it steady or is it something that's going to happen? Yeah. So let's understand how Meta, right, makes money from this 4 apps. But I'm going to talk about Facebook specifically, right? Now, so sometimes if you log inside Facebook, you will see ads all over the place. Sometimes it pops up in your news feed, sometimes it pops up on the right side. So this, for example, this one, right, can you see there's a sponsor? Sponsor is an ad. So this one is Harvard. Harvard want to sell me something, some online course. And then this Columbia Business School also want to sell me something. So now the question is, how does Facebook know, right, that this Harvard training or the Columbia training is relevant to me? How do they know? Yeah, how do they know? And so this is the first question. The second question is, am I the right audience for Harvard and Columbia University? Why not NUS? Why Harvard, right? Now, yeah. So in order to understand this, we must understand from the advertiser's perspective. So in other words, if any one of you have done Facebook advertising, right, you will be very familiar. But if not, it's okay. Let me share with you the interface if you are a Facebook marketer. Now, if you want to do any ads, advertisement on Facebook, right, Facebook allows any advertiser to select the age. For example, your target audience, my target audience is 25 to 40, something like that. Yeah, you want to target man or woman or both, language, English, Chinese, and so on. And then you can also talk about the behavior. Yeah. So in this case, for example, right, Harvard University may list down the word Harvard University. That means people who like Harvard University will be able to see this ad. And you can add, I want to target those people who are interested in drinking coffee. I can add interest, behavior, and so on. So this is from the advertiser's perspective. So remember, user perspective, you see the ads popping out all over the place. Okay. But having said that, this is the advertiser's angle. So there are 2 angles, user angle and there's an advertiser angle. So how does this whole thing come together and then, Facebook make money, right? Ready? Now, I'm going to show you one diagram. This diagram is created by me. In case you see anyone reproduce from it, it's definitely from me. Yeah, because their annual report, they don't really specifically talk about how Facebook make money, right, in the flowchart. So let me just get started. So let's say, right, today I open a new Facebook account. So Facebook, you just go facebook.com, you create an account and that's it. And then when you log inside Facebook, right, yeah, you start to look at other people's posts, you add other people's friends, and so on. So this Facebook give you functionality which are free, where you can, number one, post content, and of course you can interact with whatever that's available within their platform. Okay, so open the account, this is your benefit. So the win for me, right, as a user, right, is number one, I can connect with friends, and number 2, I can get free content from others, and of course I can also post content. Yeah. So there's something for me. That's why I would stick with Facebook. Okay, so this one, Now, but what's the win for Facebook, right? Why should they spend money building this infrastructure, server, and so on, and then let you use their things for free? Okay, remember, the win for them, right, is number one, because you open an account with them, and then whenever things you post, whatever things you post, a picture or whatever, right, you are actually generating content for Facebook. So in other words, unknowingly, you are actually helping Facebook to produce content. And you are like unknowingly working for them for free. Correct? If you put it that way, right? Then the second thing is by posting content, using what Facebook has provided you, Facebook knows everything. and anything about you. And in the early days when Facebook got started, right, I remember US FBI said that Facebook will know more about Americans than FBI will know more about Americans. Yeah, the reason why is you do any small little thing, Facebook captures your behavior. So in other words, not only Facebook has your database of all the users, it captures all the behavior. So now the question is the behavior of how many people? 3.59 billion monthly active users. That means they actively interact with Facebook. Okay, so one more time. Facebook give you something, you give them back something by producing content, by interacting, by giving away, right, unconsciously, your behavior. Yeah, certain information about you. So Facebook knows all about you. Knows more about you, right? So if they know more about you, they still have not made money yet, right? At least based on this diagram. Yeah. So what do? Now, businesses come along. Businesses want to make money, want to sell their product, like Harvard University, Columbia Business School. Or they say, okay, I want to target a certain age group. I want to target some people who are interested in upgrading, having a degree, having a cert. I want to target certain behavior, drink coffee, income level, location, US, whatever. Yeah. So businesses want to target a certain group of people. Yeah. And in order for them to target, the Facebook has what they need, right? Yeah. So imagine if Facebook is a human, they may walk to Harvard University, tell me what you want. You want this one? Don't worry, I got this database. You want female? Don't worry, I have. So, but if you want me, right, to show your product to them, you must pay me, no? So the businesses pay advertising dollars, which they make 98.1% money from, right? Billions of dollars. They're the largest advertising agency in the world, right? And then Facebook, you give your money to me, then I will show your product to them, no? Correct, huh? Okay, so this is a simple flow chart. But that's not the end, right? There's a missing puzzle, which eventually caused the drop in the share price. Okay? Okay, so ready? But remember, right? Facebook, Instagram, all these are apps. They are software, they are apps. And these apps has to be downloaded right, and to be installed in the hardware, right? And this hardware are called phones, or sometimes can be iPad, tablet, or whatever. Okay? So if somebody buy iPhone, right, and then they download a Facebook, right, or sometimes they may buy Android phone, whichever. So they download this Facebook, and then when they download, remember, Apple use iOS, yep, and Android use their own OS, and the latest one is OS 12. So what does it mean, right? And later, how does it connect to the plunge in the share price, right? Remember, if I'm Tim Cook, the CEO of Apple, people buy my phone, and then download Facebook. And then this Facebook do funny thing. Okay, for example, I'm just exaggerating, promote terrorism or promote some bad things, right? And if I'm Tim Cook, I'm unhappy with you. And then you collect so much data and then you play start a game, right? Yeah, what I can do, Tim Cook, what I can do is I can update the iOS and make it difficult for Facebook, right, to collect data. And the moment Facebook has problem collecting profile behavior or whatever, right, it's difficult for them to show the services to the merchants, and then they will make less dollar. So do you see that this part, any change here will eventually affect this ad dollars? Okay, so this is the big picture first. Later I'm going to connect dots subsequently. So if you want, you can take a screenshot of this for own reference so that you know in brief, right, in the simplest form, how Facebook make money. Okay, got it, Now, so let me just move on, right? Yeah. So now, this is how Facebook make money. But moving forward, if you want to buy the stock today, as an illustration, we must understand what are the things Facebook want to do in the future. Okay, and you have to see whether does it make sense to you. So first thing, remember, right? Facebook still want to grow. They are not like McDonald's, slow growth. They still want to grow. And they still want to focus on the ad revenue. So in other words, when Apple, Android, whatever updates the iOS, they'll do whatever it takes to continue to gather information about the consumer, right? And then present the products to them. Yeah, how they do it, recruit people, build infrastructure, and so on. So later, I'm going to talk more about how they're going to put in money, right? So ad revenue, 98.1%, very important. And then, in order for ad revenue to continue to grow up, they have to make it relevant. And to make it relevant, they still have to collect information, right? So these are the two key things, right? And of course, just now we talked about, privacy, safety, these are the, or then they want to build new experience and so on. And this one includes the up and coming metaverse. Now remember, this is a Mark Zuckerberg's dream. Yeah, whether the dream will come true or not is quite hard to say. It's, for example, Elon Musk want to go to Mars, right? Elon Musk want to go to Mars, right? So now the question, will it happen? It's hard to say, but that is his dream, right? That is his dream, right? Yeah. So the key thing here, remember, 1 and 2 remain their priority. They want to make money, right? And then they'll take the money that they make and then venture into metaverse. Yeah, which is why the reality labs, the hardware, right, comes into play. Okay. Now, so remember, even though Facebook or Meta looks very big, right? Remember, they compete with companies any companies on the entire universe that provide connection, sharing, discovery, and communication product or services to any users online, as well as companies that sell advertising to businesses. So in other words, they may not have a direct competitor, but different parts of Meta, right, is competing with someone. So who are their competitors? Yeah, Google and YouTube, Amazon, ByteDance, which is TikTok, right? Yeah, TikTok, right? Snapchat, Twitter, Microsoft, and then Tencent. Now, all these companies are mentioned in their annual report. It's not my guess. Is they say, hey, these are the people I'm competing with. And if you are a small business owner like myself, right, if you want to place ad, actually there are only 2 places. One is the Facebook ad, and the other one is Google. And Google, YouTube, they're together. Okay, so this is the giant, right, or the advertising world. Now, so, and just now remember I told you, since their app, right, they do not have phone. So the app has to be downloaded. So as long as Apple make any changes to iOS, it will affect them in a bad sense. Okay, so this is what I already shared, Yep. So this is a diagram of repetition, right? Reiteration, Now, so let's talk about I'm going to slowly inch the part whether, as an investor, does it make sense to cut loss, buy, hold, or whatsoever. But in order to do that, we must understand the share price fall. When the share price of a company fall, right, does it have any correlation whether, is it because the company has turned bad or whatever? So let's look at the company as a whole. Putting the price aside, is it a good company, a bad company, or a so-so company? Now, in order for a company to be considered good, at least from a value investing perspective, they must have a durable competitive advantage, which means an economic moat. Yeah, moat is just a river that surrounds the company. Yeah, so moat. So let's look at, does Meta, right, has some form of qualitative moat. Now remember, what I'm going to share right here in the next couple of points are not found in the annual report, but it's my own deduction, my own inference. So I let you decide whether it does make sense. So number one, my guess, right, my deduction, right, I think Facebook is here to stay. I think it's a toll. Yeah, I'm a personal Facebook user. I use Instagram, but of all these family of apps, I use Facebook and WhatsApp very often. Yeah. I think maybe WhatsApp, there can still be a replacement, but I find it very hard to, like TikTok is going to replace Facebook. I don't see it coming, at least in the next 2-3 years. Yeah, so to me, right, my deduction as a user, as an advertiser, I think Facebook is here to stay. Maybe in the next 5 years. 10 years, I'm not sure. Okay, yeah. Next one, right, Facebook definitely have patent, they have trademark. Of course, you cannot happy use this, right? Yeah, remember, this is my deduction. And since Facebook is an app, they are all over the place. Yeah, they do not require physical presence, so they have good distribution network, and they have a network effect. What I mean by network effect, right? Yeah. So network effect, it simply means that if more people join, they will pull their friends to join. So in short, it's like a ripple effect, right? And the last one is high switching cost. High switching cost means that the product is so sticky, right? Once you use, you find it painful to switch. Yeah, for example, I'm a Windows user. You ask me to switch to Mac, I don't think I can take it. Then I use Microsoft Office. You want me to use Open Office, I'm not going to do it. Yeah, so there's a high switching cost. Or sometimes on the larger scale, if a company has SAP, you want to switch to Oracle SAP, it's going to be a nightmare. Yeah, so to me, right, my inference, my deduction is Facebook does have a moat as of today. Now, whether 5-10 years down the road, somebody's going to kill the moat is quite hard for me to say. But as of now, there is. But remember, this qualitative, this I think, I feel, I watch here, my observation. But we're going to use number to support whether my feeling, intuition, my deduction is correct. Yeah, and there are many ways to deduce whether the company has a moat or not. Now, one of them, right, is to search for the company's ROIC, which stands for return on invested capital, and the other one is WACC, stand for weighted average cost of capital. Now, in short, this is a bit technical, right? In short, what we want to do is we want to see this ROIC, constantly over a period of time, right, be above WACC. And if the gap widens, right, over time, of course, some may be a bit rocky, right? But if it widens over time, that means the moat has widened over time. Or rather, the durable competitive advantage is getting stronger and stronger. So in this case, right, based on value investing philosophy, right, the company not only has a moat as of today and the past, the moat is widening, which is a good sign for value investors. Now, so what I did was additional, go an extra mile, right, to compare with the competitors. Remember just now they're also competitors? Now, if you look at the ROIC versus the WACC, I take this minus this. So do you realize that this Meta, right, has the widest, this is a trailing 12-month ROIC, trailing 12 months, the WACC has the widest difference. So I put rank number 1. So the next one very close behind is Alphabet. Alphabet is Google, right? Yeah, the next one is Microsoft. And then some is negative, cannot make it, right? Like Twitter, Snapchat, cannot make it. Yeah, so even though they're competitor, but out of these, 2 lose money, which is Twitter lose money, Snap lose money. Only the rest is making money. Yeah, so this to give you more information, right? More information. Somebody say good in working will succeed office job. I'm not very sure who is this fella. Yeah, interesting. Yeah, but let's look at the revenue, right? Revenue is when a company makes money, is recorded as revenue. Now, so here, right, the growth rate, at least based on the past, is 44%. Now, 44% is a lot, right? If you look at this green line, there's only one direction, it's up. So based on value investing philosophy, it's a pass. We want a company to be able to generate revenue, and the company can only generate revenue provided it has some form of durable competitive advantage. Now, so that is the bigger trend, right? So I'm going to zoom in to the most recent one, because the most recent one may cause the plunge in the share price. Now, so this is the revenue, right, by all this different geography, but you just add together. Now, in short, this is Q4 21, this is Q3 21, this is Q2. Now, if you look at it, there's only one direction, right? Regardless of whether the share price drop, don't drop, you realize that whether it's on a yearly basis or the most recent quarter, right, the revenue has one direction, which is up. So based on value investing philosophy, it looks good. It's good, right? Now, and then let's look at the breakdown. Okay, let me just skip this. So let's look at the net income. So what's net income? You take revenue minus all the expenses, whatever expenses that a Meta has, right? You end up with the profit. Yeah, profit. Sometimes profit or loss is also known as net income, or sometimes known as earnings. So of course, can you see the profit of the company is growing at 61.3%. If you look at this green line, over years, right? You see over all these years. Last time there's this number only 53 only. Can you see here 39,000? It's almost exponential, right? Yeah, so there's one direction. This is yearly, So based on value investing philosophy, it's a good sign. Then let's zoom into the quarterly again. You know, the number sort of jumble up because it's quarterly, right? But again, one direction, up. So based on value investing philosophy, in terms of the profit or net income earnings, it's a pass. It's a pass, right? Now, let's look at the net margin. So what do you mean by net margin, right? You take the net income divided by revenue, right, times 100%. So in short, here if you look at this 33.4, right? Yeah, 33.4% means what? Yeah, 33.4% means every $100 of revenue that the company make, right? You minus away all the expenses or whatever, you end up with $33. Yeah, just to let you have a feel, right? Any businesses that you can find in general, for profit that's above 30%, is damn good already. Yeah, it's damn good. And not only is damn good, right? Can you see this green line? If you draw one medium line that cuts across, there's only one direction, which is up. Revenue up, revenue up, right? Net margin is up. Then the quarterly one also going up. So based on value investing philosophy, it's a pass. It's a pass, right? But let's compare to the rest. I'm going to scribble. Okay, but anyway, if you look at the net margin, right, you can see Meta is 33%. Microsoft, very high margin, Yeah, that's why Bill Gates is one of the richest men in the world. Can you see Google? So actually, these 4 big guys, they have really very good margin. Yeah, either it's close to 30 or above. Yeah, so ROIC, right? Meta number 1. In terms of margin, they are side by side. Side by side. Huh? Now, let me just carry on. So let's look at the earnings, right? But this time, earnings is not the total earnings, but it's earnings for every share. Now, quarterly, one direction. Yeah, so it's a good sign, right? It's a good sign. So the earnings per share on a yearly basis, again, only one direction. So based on value investing philosophy, again, it's a pass. Okay. Now, there is one trigger point, right, that triggered the drop in the share price. Is because of this user. Let me share with you what is this all about, right? Now, in their annual report, they talk about this term, right, called daily active user. So now, as the phrase implies, right, every single day, how many people are actively using their family or apps, on a given day. On a given day, so they track the data. So which means later on you log on or whatever, they actually recorded everything, recorded everything. So it's really a high-tech company. So do you see, the thing is, in terms of daily, right, do you see, over on a quarterly basis, can you see there's uptrend? Yeah, uptrend, So the active user, right, at least based on the past, is uptrend. Yeah, so based on value investing philosophy, right, it's still good. More and more active user. And how about the last 30 days? Just now it's the day, 1 day, right? How about the last 1 month? Same trend, up. Okay, so as of now, right, at least from a value investing perspective, based on the past, not much worry yet, right? Now, let's put all this thing together. Yeah, so this is the monthly active user, right? Yeah, this is worldwide. Yeah, worldwide, everything all lumped together. In geographical location, US, Canada, Europe. This is going up. This is going up. Yeah. So, based on the numbers, doesn't seem to have a problem yet. Now, cash flow, one direction, based on value investing philosophy, is up. Free cash flow is you take the cash flow just now that I've shown you, right, which is the cash flow from operation, minus whatever investment that they have in long-term asset, right, more than 12 months, and we call it capex or capital expenditure. So now it's cash flow minus whatever they pay, right, to invest in capital expenditure, still one direction. So at least based on this diagram, still looks good. Yeah. Return on equity, what does it mean? So here is 30. Let me use simple term rather than formula, right? If this ROE is equal to 30%, which means that every $100 of shareholders' money or equity that they put inside the business, right, the business generate $30 for them. Yeah, by the way, just to let you know that ROE, if it's more than 15, is already very good. 30 is excellent. So in this case, based on value investing philosophy, it's a pass, right? Yeah, and again, let's compare the rest. Now, remember I told you above 15 is already quite good. Can you see this Tencent? Yeah, Tencent, Alphabet. Can you see all these tech stocks are very high ROE? But in terms of ranking, right, Microsoft is number 1 followed by Alphabet. So in other words, actually, Facebook is still good, at least based on ROE and some of the cash flow that we have seen. Now, then how about ROA? ROA here, let's assume that's 25%, right? So what does it mean? It simply means that every $100 of assets, whatever assets that they have, right? Yeah, these assets are generate $25 for the company. So in other words, as long as ROE is more than 15% or ROA is more than 7%, the company is really very good. And here we're not talking about 7, here we're talking about like 20 plus range. And again, if we compare, right, do you see Meta? Can you see all this? Yeah, Amazon 9, but it's still good lah. But can you see this tree? Yeah, so Meta is really one of the giant. Yeah, comparable with the rest. So far so good based on the past, right? Now, how about debt? The company can make money, efficient, making money, cash flow. We want debt to equity ratio to be less than 0.5 lah. 0.5, and here is 0.1. 0.1 is definitely 0.5, right? So based on value investing philosophy, it's a pass. It's a pass. Now, so let's look at other companies' debt. So do you notice that Meta, right, and Alphabet has the lowest debt among the rest? Remember, Twitter cannot make money. Can you imagine? Cannot make money, debt is still high as compared to the rest. Cannot make it. Amazon also very high debt, so Microsoft still, so a pass, this is a pass, less than 0.5, right? This is a pass. And the rest is high, Yeah, so in ours, ROIC bigger than WACC, Meta is number 1, Debt is also number 1. And the rest is comparable. So far, so good from the angle, right, of value investing. Now, so far so good, right? Yeah, at least from value investing perspective, right? Then, I mean, really, yeah, why is there a share price when everything looks good? It doesn't make sense, right? Yeah, because everything looks good, price should go up. How can everything looks good and then price drop, right? Remember I talked about this negative 42.6%. Now, so what's the problem? Because there is no problem, right? When I show you the fundamental analysis. Now, before I show you the problem, these are the news. We must understand that news make money from you reading it or subscribing to it. So the more excitement that they talk about, the better it is. So this piece of news, CNA, is Meta stock plunge a sign that the tech bubble will burst soon? Now, I'm quite sure that the journalist who wrote this, unlikely is a value investor. But I'm quite sure they are very good journalists. So they have the right solid stories, right? So that people, wow, oh, this one, set for 200 billion wipe out, wow, what a good heading. Among the worst in history. Wow, say until like that. Okay, now, then the rest, Zuckerberg tells staff to focus on the real due to keen competition for TikTok. Wow, very juicy, very juicy. And then, you know, as more things add on, Peter Thiel to step down as a director. Who is this fella? Okay, you go and Google, then you know this guy is a big shot. So if you look at all the news just open up, you just put Meta share price drop, all this thing will pop up. And you will never find one piece of news, at least on the first page, right, that say all along Meta is doing well. Everything is all bad news. Yeah, interesting, huh? Interesting, right? So this is even worse. This is even worse. And then to make, you see, very smart, right? When they put this kind of heading, Facebook parent loses this, on track for the biggest loss of value in the stock market history. You know what exciting title? And then plus this kind of face. Yeah, they don't put a Chinese New Year Gongxi face, right? It's a plus the face, so the whole thing, wow, damn time on February, Chinese New Year. Wow, then you continue to read on, like, it adds more, you know, wow, then you feel, wow, like depressed. Okay, Facebook parent Meta, plunged 26% at the open. Except that when they write, they don't have tonality, but if somebody is going to say it out, right, they're going to have some feeling, right? Meta plunged 26%. Investors bitterly disappointed by its fourth quarter earnings. Or somebody say, I don't think this is a good buy currently. Nasdaq is struggling, which is okay, right? Which is okay, huh? Nobody has a monopoly of the opinion, so it's okay, huh? So let me just share with you what is being shared, right? Meta's profit came in, you know, all these things, okay. But right now, I need you to zoom in for one thing, right? So remember, right now we're trying to like dig, right? What causes the drop in the share price? Okay, see, pay attention, right? Say Wednesday, giving earnings per share of 3.67. Now, so this is the earnings per share. This is the actual one. So Bloomberg has expected earnings per share of 3.84. Okay, and then the actual one is here. So how does this relate to the drop in share price, right? Ready? Remember, everybody expect, it is like your, let's say you are an employee of a company. Yeah, you expect your boss to pay you $3.84. Yeah, then one day your boss call you into his room, and then he say, no, unfortunately we didn't do as well as you have expected with 3.84. Right? I'm going to give you 3.67. Okay, Then you take out a calculator, right? In front of boss, you calculate. Shit, man, you give me negative 4.4% lesser than what I expect out of you. And to punish you, boss, I quit. They quit what? They sell away the stocks. So one more time, is negative 4.4% drop in the below the expectation, right? But they punish the stock price. Here is 26%. Okay, so now the question is, I let you decide, whether is there an overreaction, like only a little bit, only, wow, you do such a, like you overreact, right? So is this an overreaction, or are the gamblers or speculators already foresee that Facebook is not going to make it, and before that day comes, let me just sell away all I have. Okay, now here, okay, you have to pay attention to this, right? Worryingly for investors, Meta issued some guidance. Guidance is they are doing some forecast. So they expect revenue to come in this range to this range, down from here. So in other words, before the revenue drop, the gamblers hear the news, you're not going to make more money. Before the day come, before the share price drop further, let me just sell away the stock. So this is how speculators will behave. Okay, remember it hasn't happened yet, but they already started counting the egg. I think let's do it. Now, so let me just share with you my perspective. This is my conclusion, right? You can have your own opinion, and I fully respect that. So remember, right, nobody has a monopoly of opinion. You don't have to curse and swear at me after the video end. Okay, you don't have to do this. Tomorrow my life goes on, right? Yeah. Okay, so this is my opinion, right? If it doesn't make sense, it's okay. If it makes sense, then it's fine, right? Okay, so ready? Now, my perspective is there are a couple of reasons for the plummet. Yeah. First one, right, just to let you know that Facebook was all along overvalued. All along overvalued, right? So in other words, the previous overvalued share price has already factored in high expectation. I already buy the stocks overvalued. I expect you to deliver this. Alamak, you didn't deliver. I punish you by selling and running. And then somehow you said the forecast is not going to be good. Okay, so this is how the stock market works. Now, so there are a lot of perspective coming in. I'm happy with all your perspective, right? Then the second thing is overvalue, didn't meet expectation, and then there are bad news about the future, right? Now, these are some of the things I extracted from the most recent annual report. So remember I told you the iOS? Okay, and you already know how it works, right? App downloaded into the iPhone, as long as the adjustment, right? You know, it's going to affect their targeting. Okay, bad news. And then COVID-19. Now, our MTF is going to announce some announcement. I have no idea what they're going to talk about. So it's quite unpredictable. Whether would there be a Megatron or whatever, it's hard to say. Now, then here, right, user growth and engagement were also impacted by a number of other factors in the second half of this. And then they say competitive product and services. So just now we talked about, remember the Google, TikTok, and so on. Yeah, and then they try to introduce Reels, right? Reels, yeah, they also try to copy other people. Yeah, so which one can run fast? Okay, so these are, so the overvalue plus bad news, causes this dip. Okay, so these are two reasons. Now, so now the question is it justifiable? And then eventually we have to answer that question, right? Now, purposely put a total. So recently, I think it's what, 40 million or 60 million, right? So the ultimate question, okay, don't talk so much, right? Can you tell me buy or cannot buy? Correct, Yeah, but I don't want to tell you about this and then without explaining. Yeah, so that all of us are supposed to be intelligent investor. Okay, so can buy or not, Singaporean, right? Now, hang on. So before I give you the answer whether can buy or cannot buy, right? Like let's go for a break. No, just kidding, right? Like let's go a commercial break. Now, so what I'm going to do is the reason why I want to talk about this is also for some of you, right? Right now we have 428 people watching this. Yeah. Maybe before I talk about can buy or not, is it okay? Can you just type on the chat box whether are you our VIA grads or not? Now, if you are, right, can you just type yes? If you are not, you type no, which is fine, right? Yeah, just a quick survey. In the next 5 seconds, then I'm going to share with you the answer very quickly. Yeah, don't worry, I'll finish in about 10 minutes. Don't worry, right? Then remember, I'm going to leave the video over in the YouTube live so that you can share your video with your friends and then let them decide. Okay, so I'm just waiting. Are you our grad? If our grad, can you just type yes? Sorry, say yes, Ivan, yes. Okay, so yes, okay. So I suppose out of the 400, there will be a mixture of our graduates and they know our structure, right? How to buy stocks, we don't gamble, we talk about fundamentals. Well, almost all yes. No, nobody type no. But it's okay, right? So in case there are a few of you that are no, right? Now, I'm going to share with you something very important. Just to let you know that if you want to know how all these people who type yes analyze stocks or myself analyze stocks, just to let you know, we have an upcoming Onsite MasterClass in which I'm very proud, right, to share in front of graduates as well as non-graduates, right? And in our MasterClass, later I share with you what we're going to talk about, right? It's going to take place on this 17th Feb, which is this Thursday, right? And then it's going to take place on the 24th Feb. And on this 17th Feb and 24th Feb, I'm going to spend 3 hours rather than this 1 hour, right? I'm going to go into the detail, right? And tell you about the structure, how we analyze stocks, look at stocks from a company perspective. Yeah. And I just need a Adeline's help, right, to post the Eventbrite link into the YouTube. Yeah, so as I'm speaking, the Adeline, which is one of our team members, is going to post the link. And there is going to be an Eventbrite link, right, for the 17th and for the 24th. Remember, seats are limited because of the MOH guideline of about 50 people, right? Now, just to let you know that by attending, by buying a ticket, right, an online ticket to attend the masterclass, you are doing a good deed, right? Because as the ambassador for National Cancer Center, all this money, right, will be donated for cancer research in National Cancer Center. That means by buying a ticket, you're doing charity, and then you're going to learn something. Yeah. Not only that, we're going to give you some printed notes, right? So at the reception, the moment you come in and then you check in, yeah, we will give you one guide, step-by-step guide on how you can invest in STI, exchange traded funds. Yeah, traded funds, right? So Adeline, I cannot see the link, right? I think because there is a... Yeah, so Adeline, you may have to post again, right? You have to break out, right? So you hit the link 17 Feb. Yeah, you put the link in the second one, or you just put 17 Feb link, right? Or 24th link. Yeah, if not, you have to use bit.ly, right? So I just need the team member to talk to Adeline, right? Because sometimes the link is very long. Right? Yeah, so Adeline, repost. Okay, repost, right? Yeah. And then the next one, the reception, we also give you a step-by-step guide, right, for investing in the S&P 500 ETF autopilot. So in short, we're going to give you a guide. Yeah. And STI ETF, based on the past, I think has been generating about 7.6%, right? S&P 500 is about 10%. Yeah. So these are really guide for you to, how should I say, right? Use it for reference so that you can start to invest autopilot. And not only that, right? We have a national bestseller, right? Yeah, we have a national bestseller, which is Investla, right, and retailed at the $33. $33. At the end of the masterclass, right, you will also receive a hard copy book. Yeah, hard copy book, plus $10 Starbucks gift card. So which means that putting the printed guides aside, right, by donating $8 to National Cancer Center, right, we give you something worth $43. So 33 plus this 10, so your ROI is 433%, right? Yeah, 33%. So Adeline, quickly post the link inside the closed group, right? If the web address is very long, you can use the bit.ly shortcut, right? So just a date, bit.ly shortcut, just a second date, bit.ly shortcut, right? Yeah, okay. So let me just test out the link, right, and see. Yeah, the link works, right? Okay, very good. Yeah, okay, very good. Yeah, so Adeline, you can just, later on, when the chat goes up, you just keep posting this link, right? Yeah, so what will you learn? I mean, yeah, you're donating $8. So on this masterclass, sorry, I need to remove this free, because it's $8. Now, you will learn a couple of things. You will learn how to generate 3 sources of passive income. Even if you know absolutely nothing about investing, you will learn how to invest with minimal capital, which is about $100, right? Yeah, maybe on a per month basis, right? And of course, using minimal time. So assuming that if I buy Facebook, I don't really monitor share price. And the best part is for most of you who are grads, you know the selling options, right? Yeah, selling options. But of course, if you sell put option for Facebook, it's going to be quite capital intensive. Okay, so the links are there. Yeah, links are there, right? Yeah, so just click on it for those people who are not our graduates, and I shall see you this Thursday. Okay, see you this Thursday. Now, so these are things that I'm going to share. And next time, when you use the $10 Starbucks gift card to drink a cup of coffee, right, you will remember us. Remember us. Yeah. So let's get started, right? So now the question is, can buy or not? Ready? Now, based on value investing philosophy, in order for us to whether consider buying company or not, right, we have to, how should I say, number one, we have to ask ourselves, is it a good company? And because it's very hard for you to forecast into the future, right, the best you can do is to look at the past. Yeah. So in other words, if you have a child, right, that's been doing well, getting A1 straight A's, we safely assume that in the future, most likely will do well. Yeah. Yeah. Not only that, we want to buy at undervalued price. Yeah. But what is undervalued, right? In order for us to know whether a company is undervalued, we must know what is the value first. In other words, this part is to let us know whether is a yes to buying or no to buying. If it's no, then no need to say already. Okay, so if it's yes, right, then the question is, at what price do you make an entry? Because if it's a good company and you buy at a high price, it's also dead meat. Yeah, because the share price plunge, that's it already. It's suicidal. Okay, so let's look at the valuation. Is Facebook or Meta, right, cheap for you as compared to the rest of the competitors? Okay, now let me compare with the rest. You know, these are the relevant one, right? The Twitter and Snap, no need to say. This one cannot make it. Let me just cross it out, right? This one is dead meat. Dead meat, right? Now, so PE ratio, all these a bit technical. I will not go into the definition and so on. But these three numbers, right? The smaller the number, the better it is. One more time, the smaller the number, the better it is relative to the rest. So if you look at this, when I highlight this, right, that means this number is the smallest as compared to the rest. And partly it's smallest because of share price plunge. So do you realize that Meta is cheapest as compared to the competitors? The money-making one. For these three criteria. 1, 2, and 3. Okay. And since Meta, right, is a growth company, we use this ratio, right, that's popularized by Peter Lynch and fondly used by Sir John Templeton, right? We want this ratio to be less than 1. Yeah, if it's less than 1, this fast growth company is considered cheap. Yeah. So Meta less than 1, this one less than 1, this one less than 1. The rest are more than 1. So in other words, a Meta, right, compared to the rest, they are the cheapest. By itself, right, PEG ratio is less than 1. So it is cheap. But we also want to look at other valuation, to see whether does it make sense. Okay, makes sense, right? So let's look at the absolute valuation based on different people's perspective. Now, based on Morningstar perspective, Facebook intrinsic value is 400. Oh, wow. And the share price is 219. By the way, this is Morningstar, right? This is not Cayden, right? I do not own Morningstar. I have no idea what kind of formula they came up with this 400. But here, they white mode. So remember, you always take it with a pinch of salt. So remember, Morningstar say 400. That means Morningstar conclude that it's cheap, undervalued, can buy. Okay, so this is Morningstar, right? Then I use another website to see different opinion, right? So this website is called Guru Focus. Guru Focus said that it's not undervalued, it's significantly undervalued. Oh. And what is the intrinsic value, right? The intrinsic value is about 380. So their intrinsic value is very close to Morningstar. So in other words, these two companies, based on whatever algorithm they say, is undervalued. Okay. Then, how about Cayden's perspective? I think the 400 people waiting. Wow, got drop out. Just now 418, then now become 398. The 18 people don't want to hear my perspective. So they drop out. Don't want to hear. Okay, or they hear undervalued, quickly go and press. Or now they come back again. Okay, now. So remember, right, intrinsic value is an estimation. And it's an estimation into the future. And because it's an estimation in the future, right, you know what kind of assumption? So right now, before I share with you my perspective, I'm going to share with you two possible assumptions. Now, my first assumption is from today onwards, despite the competition, metaverse, whatever, right, the Meta, right, can grow its earnings per share every year 15% for the next 10 years. That means the annual increment is 15%. So this is to me moderately optimistic. Okay. The other one, right, is a bit to the conservative. Yeah. So let's assume that Meta cannot grow 15, but it grow 10. Now 10% for Meta, I think is more on the conservative side. So there's a kiasi type, right? Yeah. So if I do this, there will be one intrinsic value. If I do this, there will be another intrinsic value. Yeah. So I present two intrinsic value to you, then you decide. Okay. Now, so Morningstar is 400 per share. To them, it's undervalued. Guru Focus is 380. Now, PEG is less than 1, based on Peter Lynch's favorite metrics, right? So you know that is considered cheap. And my perspective, right, my humble perspective, is if you assume 10 years growth for next 10 years, right, is 162. Yeah. If you assume 15% for next 10 years, right, and then subsequently only 2% growth for another 10 years, with a 30% margin of safety, right, the intrinsic value range from here to here. Right now, the share price, I think it's about 219, right? Yeah. So in other words, for all of you, what is your assumption? Now, if based on what I presented or subsequently you want to dig more info, you felt that I think Facebook grow 15% for next 10 years, I don't think it's a problem. Then the intrinsic value is 225. But remember, I also have a buffer area of 30%, right? 30%, right? So it's 162, 225. Now, I'm going to show one thing and then you take a photo of this, right? If you want, or a screenshot, right? Remember this for illustration, I'm not asking you to buy. Now, for all investment, we always want to protect the downside. Ready, In their most recent annual report, they say in 2022, which is this year, we expect that our year-over-year total revenue expense may, this kind of general word, may significantly exceed our year-over-year revenue growth rate. This will adversely affect our operating margin and profitability. I mean, in simple terms, what does it mean, right? It simply means the expense will grow faster. Expense, I just put X, right? Expense will grow faster than their revenue. Yeah, so if my interpretation is correct, yeah, we are going to see a drop in the net margin, and we are going to see a drop in the earnings per share. And fundamentally, right, if there is a drop in the quarter earnings per share, I have no idea what the speculators will respond. Will they respond by seeing it as a bad thing and then they continue to put selling pressure? Now, I cannot predict share price. Yeah, but I can say, at least from the information that I gather from the annual report, right, that the EPS will still grow, but they're going to grow slowly. Now, remember, the company has no telltale sign that they're going to collapse, right? Yeah, but they'll grow slowly. Yeah, and if the company grows slowly, right, is it acceptable to you? And are you willing to pay the current share price right now? Okay, so maybe I leave this thing here for 5 seconds, right? And by the way, it's not an end. There's still a concluding remark, right? Now, concluding remark is what? Okay, now let's look at this gang of people. This is like Avengers, you know, or recently Doctor Strange movie. Now you look at all these people, I have no idea who are these fellas. This one look like Tim Cook. Okay, I only know this fella. Yeah. So the reason why I show a photo of this is you have to ask yourself when Mark Zuckerberg is the founder, right? He's the founder, he's the chairman, CEO. In other words, he called the shot. So if I go back and look at this intrinsic value, right, you have to ask yourself, Mark Zuckerberg has been running the company since day one. Yeah. And from the beginning until day one, the company has been fundamentally sound. It's doing very well. And would you want to safely assume that as long as Mark Zuckerberg is around in the management, he will continue to, bring value to the company? Okay, so remember, which projection? 10%, 15%? And whether do you have faith in Mark Zuckerberg, he will run the company in the right direction because he's going to metaverse. Now, or Facebook is going to be another passing fad, such as the BlackBerry, yeah, or Nokia, or is it going to be like Sheng Siong? It's going to be here forever. Okay, so will you invest in Meta? Now I'm going to come to a concluding remark, right? Now, in order for you to ask whether a yes or a no, remember I'm not recommending, right? I'm just giving you a structure for you to make a choice, right? And then later we'll play a game, okay? Play a game, Number one, ask yourself, assuming that money is not an issue. Okay, money is not an issue, right? You have 3 choices. Ask yourself, after my sharing, do you consider Meta a low risk, high return discounted rate? I use 10%, which is quite a gassy discounted rate. Yeah, so is it a low risk, high return investment? So this is a basket, like your choice want to put in which basket, right? Is it a high risk, high return investment, or is it a high risk, low return investment? It's low return investment, or a high risk, high return investment. So here there are 3 baskets, right? Come, let's play a game. 30% is margin of safety. Discounted rate is I use 10. Now, everybody, please type either 1, 2, or 3. I'm going to leave the video here, right? So if you want, after tonight, you can go and scroll through, scroll through, and then you see whether you want to make a poll, right? Yep. But remember, investing is an individual decision, right? You cannot, rely on people. Okay, so you either type 1, 2, and 3. It'll be interesting to know. But by the way, that's still not the end, right? I still got one very important thing which I'll end in 1 minute. Okay, so maybe I need to refresh my YouTube before I can see. Oh, a bit of lag, right? Dheeraj, I think you are our graduate lah. Yeah, so Edmund say number 1, low risk, high return. Derek say 1. Bernard say 2, high risk. And remember this high risk, low return. Low, right? This is high risk, high return. Yeah. Okay, very good. So all this so-called, a lot of people want. Wow, you oh, most of you want, huh? Wow. Okay, I leave it to you, right? I already put a disclaimer, right? Okay, there are some 3, high risk, high return. Okay, got it. So while the result come out, right, I'll just share with you a structure. Now, in order for you to decide, it is either 1 or 3, cannot be 2. Because high risk, low return is a no already. Here is no, right? Now, for Buffett, right, this is a no. For Buffett and Charlie Munger, this is a no. So I let you decide. Okay, Now, if your answer is a yes, whether it's 1 or 3, right? If your answer is yes, whether 1 or 3, let me just teach you something very important, right? Which is the portfolio allocation. Now, assuming that if you do buy Meta, and this circle is represented by 100% of the cash, now never put more than, as a guiding rule of thumb, right? Never put more than 10% into one single stock. Yeah, this is very dangerous. So you keep it like this. As a rough guide, this is not a science, right? Yeah, this is not a perfect science, as a rough guide. So that in case, touch wood, you know, wrong. Yeah, wrong, right? Then at least you lose only 10%. Okay, this one. So then the next information, right, is Sir John Templeton. In the very beginning, I played a video. So John Templeton said that even if you buy a good company at a cheap price, it may take some time for the capital gain to take place. And he, as a rough guide, said 5 years. It's not 5 days. It's not a trading, right? Okay, 5 years. But remember, it's a rough guide. As long as you make money, you want to sell or whatever, I leave it to you. But it's a rough guide. So you have a rough guide about portfolio about this, and your rough guide about this 5 years, at least from Sir John Templeton. Okay, Now, if you really want to learn more, if you're not our grad, right, you will find this quite interesting. There's a framework, there's a structure, right? Yeah. Again, upcoming masterclass is on the 17th of February, and then 24th of February. And then, I got 3 more hours. I see you. Good. So our teammate has already put up the link, right? Yeah. And by the way, this is on site, This is not like Zoom, right? I want to see your face, right? Yeah. See whether are you sleeping at home or not. Yeah. So remember, at the reception, we will give you 2 copies of printed guide. Yeah, as a reference, right? In case you're interested in exchange traded funds, we'll give you a hard copy of book only at the end of the masterclass, so that you don't take book and zao, right? Yeah, and this book is worth $33. It's a retail price, right? Cannot bluff you, right? And then the Starbucks gift card inside, there's a stored value. We actually store $10 inside. So in total, $8 to charity, $43, right? ROI. So your ROI is 437%. Yeah. So during the masterclass, you will learn how to generate 3 sources of passive income, even if you know nothing about investing. By the way, for many of our grads, you can share this link with somebody else, right? Learn how to invest minimal capital, minimal time, and of course, lastly, right, how you can generate cash flow on a weekly, monthly. But that's not the end. I'm going to show you one last thing, and then later I need Irfan to cut away this one, right? Now, what I'm going to do is I'm going to show you, right, if you are our graduates, if you are graduates, you know we learn how to sell options, right? After this, in just maybe less than a minute, I'm going to knock off. Yeah, so let me just share with you the screen, right? Yeah, KT say worth it. Thank you. Thank you, right? Now, so let's look at the 1 month option. Now, for those people who are not a graduate, you just bear with me. Maybe you have no idea what I'm talking about, but the rest of graduate, they hold until the cows come home, right? Just now, what was the intrinsic value, right? Let me just check. The intrinsic value, right? Just now I have provided is, give me a second, right? I'm trying to toggle my slide, right? Just now I provide a conservative intrinsic value, right? My conservative intrinsic value is 162. 162 to 225, right? Okay, let me put this up. 162. Now, grad, it is, okay, there's no 162. That's 160. Now, Greg, can you please help me calculate the ROI per month? If you take 0.63, right, divide, because my phone is playing this YouTube, can you take 0.63 divided by 160 times 100%? Yeah, can you just type? What is the percentage? 0.63, come. I know there's a lag in the YouTube, right? Can you just type 0.63? Yeah, correct. So Lucas is correct. Yeah, 0.63 divided by 160, and then times 100%. What is the ROI on a per month if we sell a one contract or put? Huh? Yeah, 0.63 divided by 160, and then times 100. 0.393. Okay. So this one, if you do this, right, is 0.393. Yeah. So the in terms of percentage, the premium is not a lot, huh? Premium not, right? But of course, if you find that premium not a lot, what can you do? What can you do? You can adjust, right? 165, 170, 175. 0.39%, right? You can adjust. You can adjust because it goes from the 162, right, to 225. So from here, right, assuming that you want 1%, your strike price will be 180. So in other words, if you sell one contract or put here, and then within the 31 days, if the share price touches 180, right, and below, yeah, your option will be assigned, and then you will buy a Meta at 180. So now my question to you is this. Assuming that you want to buy the stock, but not at this price, and you want a 1% ROI on a monthly basis, right? Are you okay with 180 strike price? 180 strike price, So this is one way. This one way, right? Now, graduates, pay attention, right? But what if you do a long term? Let's say you die want this 160. But 160 only 0.39. Yeah, okay, they're very sian, right? Yeah, so Kelvin is correct. What happens if you sell a longer one? Because you're a long-term investor, right? So I didn't go through this, but let me just try out 150. And we can see, we use 160, right? So do you realize that if you sell a 150-day put option for the same strike price of 160, yeah, you will collect $450 cash tonight. But if you're more careful, you can do a bit lower, right? So in other words, if Meta do well in the long run, you're a long-term investor, and then by 15th of July, right, and if they do well, and the share price go up, you will not have a chance to buy Facebook at 160. Yeah, you should be fine with that, because when you sell put, you should know. But you will have made $450 with no money down. No money down, no cash upfront. Okay? So I'm going to leave this thing over here, right? Now, in case you're not a graduate, you have no idea what I'm talking about. This is our proprietary strategy, which is called cash flow option strategy, where we will be able to generate cash upfront. And this is a real account, right? You look at top right corner, it's not a simulated one, right? But if you want to do really long term, voila, there's a 703. Okay, this is just for fun, This is just for fun, right? Let's see what happened. Boom. 160. Wow, this is a bit. You will collect $1,510 tonight upfront. Yeah, but your option will expire almost 2 years down the road, And then remember, your option buying power will be affected, right? Okay, so I let you decide, right? So for our grads, you know what's happening. I'm going to leave this thing here. So again, if you are a non-grad, right? You are a non-grad, this is the last chance, right? So I may need Adeline help to post the link again, Yeah, last chance again. If you want to know what Cayden is talking about, why the 300 plus graduates know what is Cayden doing, right? How do they generate cash flow, right? Yeah, you just need to register for masterclass on the 17th Feb or 24th Feb. On the reception, you will receive these 2 hard copy. At the end of the masterclass, we give you a hard copy of this book plus a $10 Starbucks gift card, $8 donation to charity. You get $43 in return, and your ROI is 437. Okay, and you will learn how to generate 3 sources of passive income, even if you know absolutely nothing about investing. You will learn how to invest in minimal capital and minimal time. And the cash flow, right, is just not what I demonstrated. With that, I do not want to take up too much of the time. There are about 342 people over here. So, ladies and gentlemen, in case you are a graduate, you know we are VIA Value Investing Academy. And in case you are not our graduate, just a quick intro. We belong to a company called VIA Value Investing Academy. And our dream, right, and mission is we truly care to make you a better investor. So with that, have a great evening, and I shall see all of you non-grads, right, to our masterclass. And our grad, of course, in our close group. Okay, goodbye. See you. Voila. Okay, thank you.